A substantial amount of market capitalization gains wiped out due to acute margin pressure. SONA COMSTAR, a global operator with a significant foothold in terms of innovation, technology and product. Multiple state-of-the-art plants spread out across India and beyond. Derives a significant portion of revenue from gears and sub-assemblies that can be used both in internal combustion engines and electric vehicles. A diversified product mix oriented mostly towards electric vehicles with a small portion of software and sensors is indicative of competitive positioning contributing to growth in both revenue and earnings. The company supplies to most of major global original equipment manufacturers. A reflection of its technical competence is a strong geographical presence in both America and Europe, with rest of Asia growing. In terms of segments, exhaustively covers passenger vehicle, commercial vehicle and electric two-wheelers and three-wheelers, leaving only 10% for non-automotive segment. As a dominant player in the automotive sector, a strong EV focus is evident as a significant portion of order book is dedicated to EV program. Mobility technologies like sensor systems, electronic locking differential and motor inverters are expected to drive future growth. Normal capex across the years. Dividend yield, although low, is a payout of about 30%. The qualified institutional placement of September 2024 got over 2,400 crores for repayment of loans and also for additional liquidity for acquisitions, including Kubota Railway Equipment Division. Annual generations average around 750 crores for the last 2 years, leading to a strong liquidity for future. And the company has been quite successful in generating a very rewarding return both in terms of ROCE and return on equity. During FY25, EBITDA played havoc with the company's financials as compared to FY24. Coming to revenue growth, during FY24, revenue grew up by 19%, while the growth fell down to 11.6% in FY25. That was the first warning. Second, EBITDA during FY24 grew by 29%, that is about plus 206 crores. And even the EBITDA percentage climbed up from 26% to 28.3%. It was overall a very positive year. But in FY25, the trend reversed. Growth in EBITDA was a mere 73 crores, 8% as against 206 crores and 29% of previous year. Even the EBITDA percentage crashed from 28.3 to 27.4. And worse was felt in the last quarter of FY25, where the EBITDA moved negative from 989 crores in Q3 to 975 crores in Q4 on a TTM basis. Margin pressure really upset the market and the share price. Profit before tax, excluding other income, had grown during the earlier 2 years at the rate of 21% and 30% respectively, but during FY25, due to weakness in the EBITDA, the growth was a meager 3.6 and was disappointing. Surprisingly, the component of other income added to it was substantially high, almost 100 crores more than the previous year, largely due to additional interest earned on the QIP surplus funds 77 crores and profit on sale of investments another 40 crores. And these two major components pushed up the profit, and the company posted a profit before tax of rupees 798 crores, but the market was not amused with the quality of profits as it comprised non-recurring one-off items, and therefore impact of total PBT was lost on the market. Market capitalization, price and the PE multiple throw up a situation of comparison between FY23 and FY25. Market price, which was at 480, peaked during Q1 of FY25, but subsequent fall followed due to fall in margin, reaching a level almost closer to what it was 2 years ago. Under market capitalization, QIP issued 6% extra shares, but that impact is lost as the market cap is closer to what it was 2 years ago. PE multiple, as a result, is at its low. On the whole, the price as at present is at an attractive PE, but the recovery can be expected only if there is substantial improvement in the margin and in the final profit after tax. A unique shareholding pattern where promoters have slightly reduced their stake during the last 3 quarters. The stake currently at 28%. DIIs marginally increased their hold. Mutual funds have added substantially. Between FPIs, mutual funds and DIIs, the holding is almost 65%, reflecting the total trust in the company and its business prospects, keeping with the company's strategies for the future. On a daily chart, the share price reached a peak of 750 in September 2024, but in December 50 EMA crossed down the 200 EMA, taking it to the bearish zone, losing almost 51% of its peak and reaching a 52-week low of 380 in mid-April. Subsequently, it recovered and moved upwards before the unfortunate demise of the company's chairman occurred, and the subsequent fall has brought it in close proximity to the 23.6 Fibonacci level. The falling price has erased all gains in the share price over 2 years. It is both a concern and an opportunity for probable growth in the near future. SONA COMSTAR, a supplier to major global players, leading in technology and having strong finances, operations at the best of efficiency, but margins have suffered in the recent year and thereby the profits. Over-reliance on US market and the threat from China in respect of rare earth material and also its OEMs. Company's acquisition from Escorts Kubota of Railway Equipment Division is a concern in terms of its synergy with the EV focus of the company. Hope you found this video on SONA COMSTAR to your liking. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You can access similar videos with a rich content at our info card. We await your valuable suggestions. If you are new to the channel, may kindly subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.